We welcome back from the report. We move straight into a major discussion for this segment. The International Monetary Fund, IMF 2021 Article 4 estimates that the giant of Africa, Nigeria, spends 85.5% of its total revenue to service its total debt of about $95.17 billion in 2021. But a worrisome part of the scenario is that its peer country, South Africa, spent a paltry 20% to service its much bigger debt of $261 billion during the same period. What's the missing link, really, in Nigeria's debt management? We have someone to help us understand this better. The former Director General of the Securities and Exchange Commission, Dr. Suleiman Indanusa, joins us via Skype at this hour, and also joining us by phone is the former MD of Springbank. It's an economist and a lecturer from the Bayes University, Dr. Mukhtar Imam. Good morning, Doctor.
Good morning.
Thank you very much for joining us this morning. Starting with Dr. Mukhtar, what would you make of our current debt situation with regards to debt service, especially in the face of the continuous argument by government functionaries that we do not have a borrowing crisis? What we have is a revenue crisis. At the rate at which we are going, is this still healthy for the country to continue borrowing if we go by the government plans for 2023, where it hopes to bring in an additional 6.3 trillion naira in fresh borrowings? We seem to have had a bit of a hitch there. Talking to Dr. Mukhtar, I would come straight to Dr. Indanusa. Can you please help us make a sense of this borrowing and our debt service in the face of fresh plans for a new 6.3 trillion naira, which may likely jack up our total debt stock to about 45 trillion by the end of this year? Dr. Indanusa.
Thank you very much. Indeed, our public debt stock, like we all know, it's about 40 trillion naira, which is about 94 billion US dollars. You recall just at the first quarter of this year, the federal government has already raised about 1.25 billion US dollars. Now, the criticality of this debt is when you actually look at it in context, and the fact that if you dissect all the debt, you see that 48% of the total foreign debt is multilateral, which the interests are quite low. Bilateral is also about 11%. But the worrying aspect of our debt are the non-concessionary debt, which is the Eurobond and diaspora, which takes almost 38 to 40% of the debt. And in terms of debt service, it takes almost 70 or 75% of the total debt service. So, of course, if you look at the issues with our debt, it's becoming very unbearable. That is the burden. Either so, the DMO has looked at our debt from the perspective of the debt to GDP. And if you look at that, the World Bank threshold for that is about 56%. And if you look at it, the Nigerian ratio is about 24%. And the DMO is trying to explain the fact that being at 24, then there is no cause for concern. But that is not the issue. You have to look at it from our ability to service those debts, not compare our debts to GDP. It is our ability, the revenue available to service that debt. I think that's where the biggest concern is, because between 75 to 90% of our revenue is being used to service both the local and foreign debt. And again, you also know that the fact that we have about 40 trillion naira debt, that is not all that is. If you look at the umbrella funding by central banks, that is printing of money, which different people are ranging it between 10 to 20 trillion naira, one begins to be very, very worried.
That is the ways and means.
Yeah, ways and means. And also, if you look at the fact that there are other sources of domestic debt, contractors, we also have AMCON debt, which is about 5 trillion naira. If you put it together, all those things are liabilities waiting to crystallize. So it's not just 40 trillion. We have more than that if you bring all these ways and means and so on together. So our ability to really pay this debt is what is in doubt. And then, unfortunately, there is a rising fiscal deficit, which you've alluded to. Already this year's budget, 2022, we have about 6.7
6.3 trillion naira
deficit. If you include that of state and SCT, which is another 1.6 trillion, our deficit is indeed almost about 8 trillion naira. Most of it is expected from debt, either domestic or foreign. So it is definitely very worrying because our debt service to revenue that averages about 76% today is very, very critical. And therefore, something has to be done. Maybe I should stop at that. If you ask other specific questions, I would like to answer.
Okay. Now, the Debt Management Office has said that borrowings by the Nigerian government to fund critical infrastructures and deficits is not necessarily a bad idea. What do you think, about that assertion?
Well, on the face of it, it may seem like that. But if you look at in our 2022 budget, for example, the aggregate revenue is about 10.74 trillion naira. The aggregate expenditure is 17.13 trillion. Deficit, like we all know, is about 6.39, without even adding the one for states and FTT. But if you look at aggregate capital expenditure spending, which we will expect a lot of it will go to for infrastructures and so on, is 5.96 trillion, which is less than the budget deficit. Automatically, it means that some of the monies we are even going to raise is not going to capital. It is going to a recurrent expenditure, and that has been the bane. Almost only about 48 to 50% of the deficit that we finance by way of debt actually goes into capital formation. Most of it goes into recurrent expenditure. In addition to over-invoicing of the capital projects and the productivity of those capital investments. So, yes, on the face of it, DMO may want to say there is no worry because they are raising money. But it has to be we have to clearly link what we are raising to the projects that we are supposed to do. If you look at our debt structure, for example, most of it is dominated by FGM bonds. And these FGM bonds are not tied to self-liquidating projects. We have about 13.5 trillion in FGM bonds, which is about 73.84%. So the real infrastructure bonds so far is tied to Sukuk and the green bonds. And all of it is less than 3%. So when you look at some of these things, you begin to wonder. If the argument is that we are tying this to the project, then we have to see that it's tied so that we can monitor and evaluate the value propositions that we derive from that. But even the majority of the bonds under the FGM bonds are not tied to any project. It is just of recent that the federal government has started having a project-tied bonds like Sukuk and then the green bonds, which are meant for specifics that you can look at and say, yes, these are things that we took this money for and we are using. So essentially, we must be very clear about that the productivity of our bonds or our debt can be brought to question.
So thank you for those thoughts. We now I think we have gotten back Dr. Mukhtar on the line. Dr. Mukhtar, I would like you had listened to what Dr. Ndanusa had said. The question would then be, what can we do to improve our lots, as a country? Clearly, the rate at which we are going with the amount we are spending to service this debt, it's no longer sustainable given fiscal space. Which one should be a low-hanging fruit? Expanding the fiscal space so that we make more revenue and to drive down the ratio of these payments, or to begin to look at restructuring this repayment such that it can bring down significantly this repayment. And with that, I mean, in direct response to Dr. Ndanusa, can we begin to look at more of the multilateral loans rather than the unstructured green euro bonds that we go for, that basically it's far more expensive than what we get from the multilateral or bilateral loans?
Can you hear me now?
Yes.
Okay, so I missed a large portion of the conversation, but drawing from the discussion from the last portion of what you said, I think both would work pari passu. There's the need for the government to ensure that there are structured policies and plans in place in terms of, for example, the need to ensure that resources that are taken for loans, rather, that are taken for infrastructure development, are put into these loans are supposed to go to. The issues which you raised, the twin issues of, first, looking at ways of expanding.
We seem to be having quite a number of challenges there from... Okay, it's back.
All right, so part of what needs to be done is to ensure that while we're at this, that we begin to produce more. You see, the only way we will be able to meet our responsibilities or obligations of servicing debt is to ensure that our production base is high. Currently, what we are experiencing is a very large or a high curve in terms of import, as opposed to what should be the case, where you have an economy whereby 8 kobo out of a single naira that is gained goes into debt servicing, which is not very sustainable, like you rightly mentioned. So a lot needs to be done in that respect. Nigeria is an economy that is not necessarily blessed industrial-wise, but we have something that the world aches for in agriculture. So we can leverage on that, ensure that we invest more into agriculture, and then begin to expand into the value chain of agriculture, not just necessarily investing into it, but tapping into the various key value chain of agriculture so that we commercialize it in a way that it brings in service for money. And with that, we will be able to service these loans. As a matter of fact, I believe so much that where this expansion is done significantly, we'll be able to ensure that the loans themselves are drastically reduced. And that is very, very crucial to growing our economy. And then, of course, while expanding the revenue base, we must also ensure that we cut wastages. And by cutting wastages, it's not just about paying lip service to these things. It must be done in synergy, both at the national and subnational levels, because there is no meaningful or sustainable development that will come into this country without the subnationals being brought into play. You have a lot of governors sitting in their various cocoons and trying to live like emperors and kings while burdening the overall revenue of the country.
Okay, while we try to secure connections back with Dr. Mukhtar, Dr. Suleiman, you were a former Caesar of the Securities and Exchange Commission, and you have mentioned in your opening comments about the constitutions of some of those loans, especially the Eurobond as compared to others. And when we look at the interest payments on Eurobond, we see how high that is against the multilateral rules. Do you think, in your opinion, that we have made use of the capital market or the debt market sufficiently enough back homes, where we would have been able to secure long-term debts at a considerable interest rate and denominated naira debt such that we don't continue to suffocate from the crisis of the exchange rate crisis, which may, as at this morning, which may be triggering or tripling whatever those our exposures are in dollars?
Thank you very much. Of course, the federal government has been going to the capital market to raise funds. That is why you have the bonds, the SGM bonds. You also have the savings bonds. You have the cook and the green. All those are from the capital market. But essentially, what is important is the fact that as we raise those bonds, how productive, what is the multiplier effect of the utilization of those bonds? How efficiently are those the profits of those bonds used? What are the leakages? How are we able to get value for money? Because the multiplier effect of whatever bonds we take and invest in infrastructure, etc., is expected that later will create other values that will enhance our revenue propositions and employment, etc. But where those things are not there, then there's a problem. That is why it is important for us to reduce unproductive government expenditure. Why should we raise money and go and use it for recurrent expenditure? As much as possible, the revenue that we generate should be able to service our debt. But if those revenues, revenues are not properly harnessed and invested and used for useful things for our economy, obviously the vicious cycle will continue. So we have to look for more innovative ways of financing our infrastructure, for example, more emphasis on PPP, and also so we design projects and we structure projects that will attract equity to do it, so that the revenue themselves will self-liquidate those loans. A lot of more innovation is required in those areas. And then the implementation of our policies are very important, because badly conceived policies, badly implemented policies also lead to a loss of serious resources. And even if you borrow, you'll be using it in the wrong way. But therefore, what are the other options that we need to take, apart from just going more and more for bonds? The printing of money that we have been doing, we see how disastrous it is on inflation and so on. Sale of government assets have been tendered as one way, that if there are moribund assets, maybe we should sell and invest in other modern infrastructure. Then increasing VAT and CIT, that is company interest, company income tax. They are good propositions, especially being pushed by the IMF. But the point is that at this point in time, when inflation and all the unemployment and poverty is so pervasive in our societies, our government has to be very clear in the counter narrative that increase in VAT and CIT will cost to the society. Diversify export, reduce public sector waste, and of course reduce subsidy, which is not politically popular, especially with the election coming. A lot of the subsidies that we give, which does not really trickle down enough on the people, is draining our revenue. Because if you look at how much we are budgeting for subsidies, the opportunity cost would have been for it to go into one infrastructure or the other. But that is not happening. It's not politically popular at this time, even though government is gradually trying to reduce subsidy in the power sector, in the oil sector, etc. So there are some tough decisions that need to be taken so that we can actually move towards reducing revenue waste, attract more revenue, create widen the tax base, and so that we can strengthen our revenue. And there is an initiative which is called the Strategic Revenue Growth Initiative. If those things are implemented, then definitely it will sensitize the kind of borrowings that we do both domestically and foreign.
Okay. Thank you so much, Dr. Suleiman. Now, let me direct this at Dr. Mukhtar. Would you say we are generating enough revenue, and how much of an impact, would this increased borrowing have on Nigeria's macroeconomy?
Well, we at this point cannot say we are generating sufficient revenue. The reality is this, that when you look at the debt to GDP ratio, which basically has been said to be within the margin that is still tenable, and then, of course, just oppose that with what we're talking about here, the debt to revenue ratio, you find that what we take out of what we generate to service our debt is not sufficient. Like I mentioned earlier, we're taking about 7 to 8 kobo out of a single naira that is made in this country to service loans and debts. That is not sustainable, and it doesn't speak in the direction of a country that is generating sufficient revenue. And that's why there is a need to ensure that we divest and find multiple sources and streams of earning for the country. That is very, very crucial. And we must also ensure that we look at the export market, because the truth is, there is no economy that is import dependent that will be able to sustain and grow itself. It is not feasible. That economy is certainly going to hit the brick wall. And so therefore, there is the need to ensure all of these things are done. The question that was asked earlier about accessing multilateral loans and concessionary loans and all whatnot. The reality is these non-concessionary loans are limited. They're not always available. And there is the rush by virtually all economies around the world to be able to access these kinds of loans. The type coming from China, for example, for us, virtually the entire world is looking east now when it comes to getting these loans. And so, therefore, these streams of getting access to loans becoming strangulated within the international system, and it is significantly affecting us. And so, therefore, our revenues are not sufficient, and there is the need to ensure that more is done. The thing about economy is we always look at the numbers and the figures. We've talked about measures through which revenues can be increased. For example, company tax
Clearly,
revenues are kept,
please. Okay.
accessed, implementation becomes a problem. Using these resources for capital projects and infrastructure development that government itemizes becomes a problem, because the individuals themselves who are supposed to manage efficiently these resources and ensure that we see value and we have a return on investment on all of these various projects that have been talked about are not being done. And so there is the social psychological problem that is tied to the economic, basically retards the growth of the Nigerian economy. And that also has to be looked at as well. And by the way, Nigeria is one of those economies that is overtaxed, one of the most overtaxed economies in the world. So more attention needs to be focused on PPP, as has been mentioned by my respected elder, the former DG. More attention has to be paid into that. But the problem with that is this, that foreign direct investments and wooing in investors who would be able to bring equity to fund some of these projects is no longer feasible because of the security challenges that the country is facing. And so government needs to take charge to ensure that these issues are addressed. To have epileptic power supply in the country, these are responsibilities of government. If government does not put these infrastructures in place, there is no way we're going to woo in investors to be able to ensure that we, utilize resources into capital projects and infrastructure development for the overall gain of the Nigerian state.
Thank you very much, Dr. Mukhtar. Now back to you, Dr. Ndanusa. You've listened to quite a number of those thoughts. I was thinking to myself when you were listing the options available. For every option you mentioned, I thought of a problem, which you also identified. You talked about expanding the tax net, and one would wonder who else will pay those tax, that companies that are already contending with quite a lot, generating their own power, probably paving their own roads, and all of that. You talked about the PPP. We have not exactly done very well with previous PPP attempts in Nigeria. You are aware of what had happened to the initial concessioning attempts of the Lagos Ibadan Expressway, and all of that. You talked about expanding exports. That would mean adding value. We don't know whether the manufacturing firms where we are today would have the capacity to do that immediately. Given all of these challenges, how much of quagmire are we in, with the bid to changing the narrative for Nigeria?
Well, I'm optimist because otherwise we will just close shop and forget about any hope of getting out of the issue. As it stands, the revenue to GDP ratio we have is 6%. 6%. That is the revenue to GDP ratio. Our debt to GDP is about 24%, and still counting. And therefore, our deficit is growing. All those things are characteristic of revenue issues. So, what is the major issue that we have as far as our funding is concerned? Is obviously revenue, and we have to look for creative ways of raising those revenues. Going by the debt route, it cannot work. At the end of the day, it's becoming already unsustainable debt. So what are the other options? Yes, the fact that the other options are not looking up right now does not mean that we are not going to continue to look at those areas and look for more creative ways to making it work. For example, one area that you do not need anybody, it's not difficult to do if you have the political will, is to stop the wastage. And is to emphasize on priorities.
Okay.
Stop the wastage, emphasize on priority projects, and of course, cut off the corruption, which are the leakages, and then direct your resources to those projects. As for the taxes that we are saying, the more productive our infrastructural investment becomes, with better roads, better railways, better power supply, and all those things, it increases productivity. And when productivity is increased, that the ability to pay taxes will, even the small-scale businesses, if they can have light 24/7 or most of the time in the day, obviously their productivity will increase, the revenue they generate will increase, and then they become easily taxable. And so it's a multiplier effect. The entire value chain of our economy has to change. We have to look at our concerns, and we have to see how we can tackle them. Then we have to also, of course, diversify. We are depending so much on oil. The crash of 2016, 2017 is because of the crash in oil prices. We are solely dependent on oil, so whatever happens to the oil sector, it affects us. Even now that we are having a bumper harvest, we are supposed to be having bumper harvest in oil prices, etc. We are not able to have it because of the huge subsidies and then the huge waste, the theft of the oil itself, oil bunkering, etc. It's denying us to enjoy the bumper harvest from caused by the Ukraine war, etc., the Russian-Ukraine war.
Thank you very much.
Those are the areas we have to look at. There is we just have to do it. There is no option. If we don't do it in the short to medium term, then the vicious cycle will continue. And I don't think any Nigerian, both the citizens and the leaders, will want us to leave, because these are practical issues that must be resolved.
Thank you very
we have
much.
revenue issues, and it has to be tackled.
Thank you very much. I'm afraid that is how much time would permit us to take this morning. Thank you for those elucidating thoughts coming from the former Director General of the Securities and Exchange Commission, Dr. Suleiman Ndanusa. It's a pleasure to have you join us this morning and offer your perspective. And also on the show this morning, it's an economist and lecturer from Bayes University here in Abuja, Dr. Mukhtar Imam. It was a pleasure have you join us this morning and offer those insightful perspectives on what we can do, to move this country forward with regards to our revenues and debt service challenges. It's a pleasure to have you both on the studio with us. Do have a great day ahead.
Thank you.
We will take a short breather at this point. When we return, the discussion continue. Please stay with us.